A wise man once told me that as investors, most of us aren't losing money when we sell a stock. We're losing money when we buy a stock.
Wow.
In this video, I'm going to teach you as a non-financial expert how to look at a balance sheet in 5 seconds and determine if you're likely to make money in a play or flush it all down the toilet. Let's get right into it. Hey guys, Tony Denaro here. Welcome back to the channel. Who's tired of losing money? Some of us call ourselves investors when we are really just speculators in denial. I want to show you a quick and easy way to look at the balance sheet and determine if you're buying a company as an investor or a speculator. 5 seconds to look at a balance sheet and know what kind of company you are buying. The first thing that I want you to look at is at the bottom of the balance sheet. It is called stockholders' equity or deficit. It is right here. You can see on this particular balance sheet, it says 39 million, and it grew from the previous year. If there is a stockholders deficit and it is getting bigger, you are speculating in a troubled company. This is not a good sign. The second thing that I want you to do is look at current assets versus current liabilities. In this particular company, they have 11 million in current assets, but they have 70 million in current liabilities. Current means obligations that they're going to have to pay within the next 12 months. This company has $70 million worth of liabilities they're going to have to pay within the next 12 months and only $11 million in cash. What does that mean? You're going to be facing dilution, or this company is going to be going bankrupt. If you are a day trader or a momentum trader, looking at the balance sheet usually doesn't matter because we are in and out of a play quick. But if you are not looking at balance sheets and calling yourself an investor and ignoring a train wreck like this company, you're not investing, you're speculating, and it's probably not going to end well. Spend 5 seconds, guys, just 5 seconds looking at balance sheets before you get into plays that you're going to hold for the long term. We can't get mad at shorts. There's a reason why this company is being shorted. We can't get mad at CEOs for doing dilution. There's a reason they're diluting. They need to fix this train wreck balance sheet. The outcome of a balance sheet like this is very predictable to a seasoned investor. They are either going to file Chapter 11, they're going to take on debt maybe to raise some cash and pay those current liabilities, robbing Peter to pay Paul, trading one problem for another problem, or they are going to do dilution to raise cash and fix the balance sheet. You don't want to be in these plays knowing that all of that is headed your way, and in 5 seconds, you can always see it coming. A 5-second look at a balance sheet like this, and you can be reasonably certain that this price has only one direction to go, and that is down. I am Tony Denaro. Thank you for watching. I hope you got some value out of this, and I will see you on the next video.